Hey traders, welcome to the YouTube channel. So today we're going to look how to actually get ahead of 99% of other traders. So before we start, if you can like, subscribe, do all that good stuff, you know, the usual, and we'll get going. So separating yourself from the 99%. You have all the info you need freely on the internet, but you'd likely still fail anyway. The difference between you and a successful trader is simply down to mindset. For example, a pro trader and an amateur trader will have the exact same thoughts like, what if I lose? What if I fail? What if this trade doesn't work? But the difference is the pro trader doesn't stay with them thoughts. They'll notice them, they'll let them go, and then they'll redirect the focus to what they need to do. Whereas the amateur trader will just obsess over that and ruminate and worry. And what this does is it creates a negative domino effect, which triggers them for the next trade, the next trade, the next trade, and just creates that vicious cycle. So learning your mindset to strengthen that and create an iron mindset is going to be key in trading. So it's how you think. It is that simple. So the easiest way to think like the 1% of traders, to find the proven thinking ways that doesn't work and then do the exact opposite. So let's look at 5 reasons why most traders fail. According to popular CFD brokers, these are the actual stats. So why 99% of traders fail? So they lose more often than they win. So they have negative risk to rewards. They have small account sizes. So what this means is they go funded, trying to grow the account quick as possible, and you're just creating bad habits, you're over risking, over leveraging, and you just end up blowing account after account doing that. No stop loss. Why do people not put a stop loss in? Because they don't want to lose. They don't want to admit that they're wrong. So by not having a stop loss in, you don't have to get out. So that is a main one right there. Over trading, impulsive. They have losers, they keep trading, or maybe they win and they keep trading and trading. And what this does is it just ends up blowing the accounts again. Adds to losing trades. If they lose, they keep adding more. Catching a falling knife is a common theme. So if it's going down, for example, they buy, keeps going down even more, or it must be really cheap now, I'll keep buying and buying, and they just end up blowing their accounts again. So do you notice a common theme? Most failure is not due to a lack of technical knowledge, but a lack of emotional control. So we need to do the exact opposite of this. So doing the opposite examples here. So reasons for failure. So they lose more often than they win. What's the opposite of that? Place positive asymmetric bets, at least a 1-to-1. So that way we win more than we lose. Small account size. So what can you do with that? Add more money, become more valuable, maybe take more work on at work or create a side business and start making money to put into your trading account. But most importantly, be willing to lose the amount of money as well. So don't be putting money into your account that you can't afford to lose. That's going to be key as well, because that's where emotions will come in. No stop loss. What's the opposite of that? Can you have a guess? Put a stop loss in each trade. Okay, your stop loss is your best friend in this trading. It will save your ass. Treat it like a friend and make sure you put one in. The next, over trading, impulsive. What can you do the opposite of that? Set daily trading limit. So if you lose 2 in a row or 3 in a row, you're done for the day. That's your limit. Or you could say, if I lose X amount a day, that's it, I'm done. As to losing trades, what's the opposite of that? Add to winners instead. So instead of when it's falling down and you're trying to catch this falling knife, adding more and more, instead, when it starts working, then you can start adding to it. And that's where you can get these real monster returns. So by doing these, you immediately increase your odds of winning. That simple. More scary stats about failing traders. The average trader stats, 80% lose money, 10% break even, 10% win consistently, and day traders have the biggest failure rate. You often see newer traders, they think they want to make more money, they want to make it quick. So what's the first thing you think of? Oh, I'll use a lower time frame. I'll go to the 1 minute, therefore I can get more trades, more money. Are these people really ready for the 1 minute time frame? It happens so quick. Have you had time to learn and manage your emotions? And going to the 1 minute, you're not going to be able to do that. So that's why I always advise traders to go to a higher time frame, start learning to deal with the emotions, with having money on the line. It gives you more time to think. Traders with a negative risk to reward ratio have a 300% more chance of losing money. That's a big one right there. Don't have a negative risk to reward, okay? Have a positive risk to reward. Calculate your risk to ruin. So this is why it's important to back test your strategy, forward test, whatever. Just make sure you have data to prove what the win rate is for the risk to reward and things like that. So then you can understand the stats. So let's have a look. If you have a 50% win rate, okay, here. If you go for a 1-to-1, you've got a 100% chance of blowing your account. If you go for a 2-to-1, you have a 0%. Okay, so you only need a 2-to-1 with a 50% win rate. That you can be profitable just with that. If you have a higher win rate, let's say 80%, okay, you can go for a 1-to-1 ratio because you win more trades than you lose. You have a 0 chance of losing the account. So understanding your risk to ruin is going to be very, very important. Will your current strategy make money or blow up your trading account? So advise now, go back, look at the strategy that you're trading, test it, verify it, see what risk to reward is the best one for your win rate. Must be at least a 1-to-1 for each trade if you have a high win rate strategy. Okay, so have a play around. More common failures I personally see: take profits too early, change strategies when they hit a losing streak, let losses run and cut winners short, take opinions over the system, not testing small, no awareness that the emotions are the devil, trade previous results, not present trades, take profit to get back to break even instead of letting it run to target. You've probably seen this a lot. So if you're taking profits too early, you're not letting the odds work in your favor. You're actually getting a negative risk to reward. And what did we see that stat before? You have a 300% chance of losing if you're going for them negative risk to rewards. So you have to make sure you let your targets hit. You need to be going for that average risk to reward. Change strategies when you hit a losing streak. This is because you automatically think, oh, the strategy is not working. But that's not the case. All strategies have drawdowns. Like I said before, with a 2-to-1 and a 50% win rate, you're going to lose half of your trades. So if you take 100 trades, you're going to lose 50 of them. So you can hit losing streaks of 6 in a row. But if you keep executing it, eventually the odds play out and you'll come out profitable. So let losers run, cut winners short. Instead of cutting the winners too short, you've got to let them go. With the losers, you've got to cut them quick. Take opinions over the system. So you can't be doing what they call herd bias, where you're going off what everyone else is doing. You have to have your own system. You have to be self-reliant. You have to have proven rules that you've tested and verified, and then you execute that over a large sample size of trades and not let other people affect your trades. So what you can do with that is just make sure you remove all the distractions when you're trading. Don't have social media or other people posting the trades, things like that. Not testing small. Everyone's trying to get rich quick and they're going in full risk. They're risking half of their account and they're going to blow up. So you need to test small, create the right habits, verify that the strategy works, all that stuff. No awareness that their emotions are the devil. All the answers are in the technicals. I think that's where the problem is. But that's not what the case is. The true success is going to come from within, learning to deal with your emotions better. Next is trade previous results, not present trades. So like I said, you can have losing streaks. You can lose 6 in a row. But if you're focusing on that and you're not going to take the next trade because you had a losing streak, that's where you're going to end up ruining your results. Next, take profit to get back to break even instead of letting run to targets. Let the targets, you set your predefined target, you got to let it hit. You got to let it go. So all emotion-based actions to avoid pain. That's what it is in a nutshell. This one thing is what it takes to be in the 1%. We've got to fight our primitive mind. So the human mind is wired to get away from danger, pain. The trading environment needs the exact opposite of this. So awareness of this is going to be key. So we must learn to become comfortable with being uncomfortable. So back in the ancient times, we were wired to survive. From a saber-toothed tiger, we had to be alert. But nowadays, we don't need that. But those instincts are still there, them impulses. And the saber-toothed tiger is now money. Okay? Money means power, money means survival. So when we have money on the line, these old primitive instincts start kicking in again. We're not hardwired for trading. It's that simple. So we need to learn to rewire, reprogram ourselves. So this is why it takes so much time for traders to do it. When traders say it took me 5 years to get this right, they're not talking about the technical. They're talking about the mindset, the impulses, the triggers, trying to overcome them. So that's why you have to take it slow, create the right habit, do all the preparation and start small. And that's how you learn to get comfortable with being uncomfortable. So common fears in the 99% of failing traders. Feel fear when you shouldn't. You feel hope when you shouldn't. You look for reasons not to follow your trading plan. Your action plan. Be aware of these emotions while you're trading. Maybe record a video of yourself to watch yourself, how you're reacting, create that awareness, and then learn to do the opposite. And repetition, okay? It's not going to come overnight. You're not going to get this straight away. You've got years of old beliefs and things to rewire. So it's going to take time. You have to do it over and over, like a muscle. A muscle needs to get strengthened over time. You can't go into the gym and lift the heaviest weight, expect to do it, because you're not going to be able to. You're not strong enough yet. So you need to start small and light and gradually build up your strength. And this is what you need to do. Accept that this will be hard, okay? It's not going to be easy. It's going to take time and effort. But once you accept that and create the realistic expectations, it's going to be a lot easier. So what are your options? If you keep doing what 99% of traders are doing, you will fail. It's that simple. What you need to do is the opposite of the 99%. Your trading success is about how you think and act, not the strategy. Don't be normal, be an outlier. So start small and build the right habits, and you'll be well on your way. So don't forget to like and subscribe to the YouTube channel for more free info. And also check out my rule-based price action trading program at thedivergenttrading.com. Also, pleased to announce I've just opened a Discord channel where you can trade live with me every day. Also see my recaps, watch lists, and just connect with me a bit more. So if you're interested in that, the link's below in the description. So thanks for watching and take care, and I'll see you in the next video. Thank you.